Hello, this is Will Allen with Centera Capital. In today's market update, we are going to take a look back at last Monday morning's global financial market panic and talk about what happened and why. We're also going to look at the most recent economic data and inflation data because it really tees up the Fed to start their rate cut cycle next month. Let's dive into it. Now, before we get into the market update, just a reminder to like and subscribe. Make sure you turn the notification bell on so you don't miss a video, and you can share with any friends or family who aren't getting market updates from their advisor. All right, what we want to start out by doing is take a look back at what took place last Monday morning when there was global panic in financial markets all around the globe. Assets were being sold, whether it be crypto, bonds, stocks, you name it. Everything was being sold and liquidated. Now, what had happened was basically something called the unwind of a yen carry trade. I'm not going to get into those details now. If you want those, you can comment in the comment section and I'll respond there. But basically what had happened was a very popular trade for a long time was it was going the other way, and it was a lot of forced selling that took place. And so when we came in here, woke up on Monday morning, the Japanese stock market was down 12% and US stocks were down 5% plus, including stocks like Apple were down 11 or 12%, Nvidia was down 15%. These are huge, huge moves in stocks. And again, a lot of that was forced selling. That was at 7:30 a.m. By 9:30 a.m., when our stock market opened, about half of those losses had evaporated, meaning a lot of institutions had come in and bought at those artificially lower prices. Now, what is important again is this sell-off was not the result of fundamentals deteriorating with corporate companies or the economy in meltdown mode. This was based on the unwinding of a trade over in Japan that really led to a lot of this. Now, one other thing I want to mention, we had just done a market update video on the previous Friday morning. If you haven't seen it, you can go back and check it out on our site here. And that video was a response to a jobs report here that set off a lot of concern about a potential recession. 114,000 jobs have been created last month. That was much less than expected. The unemployment rate went from 4.1 to 4.3%, so there was genuine concern. In our video, we said we were not at that point concerned that a recession was imminent. We still felt like the data, when you dug deep, were telling good things, and what companies had said in their second quarter earnings were very positive, generally speaking. So, with that being said, when we came in Monday and markets were down significantly, we knew that with that much panic, we may hear from a couple clients. And the fact is, out of our 125 clients, we only heard from 2 or 3. And their questions were, what do we do now? Now, to answer that, we first went and let's look at a new measurement for you guys called the volatility index. We haven't talked about it before, or very rarely. It's called the VIX, and it measures the level of volatility in the stock market. So if you take a look at this, what you will notice, this goes back to 2019, and you will see on the far left side that spiked higher in 2020. That was at the height of the COVID sell-off. Now, if we go back then, you will remember that the stock market dropped almost 40% in 4 weeks. There was absolute panic then. The economy was shut down. There was chaos. We then, when we saw the VIX reach a sky-high level near 80 at that time, we started deploying some money to work because frequently, when you see volatility reach those kind of levels, a market bottom is very close at hand. And that's what ended up being the case then. Now, if you look again at that chart, what you'll notice is that since 2020, this had stayed between 30 and 40 at its highest level. That was in 2022, for parts of 2022, which was a tough year for the markets, but it never reached 50, 60, 70. Fast forward to last Friday, and you will see that that rose all the way up to 65 on Monday morning. When we saw that, we knew, hey, this is max panic. It's only been this high 3 times since 2005. One was in the financial crisis, and one was during the COVID period we were just talking about. So you never want to sell when that level is, when the VIX is north of 60. And so we knew, hey, look, in the short term, this may be a market bottom. Now, if we take a look at what the S&P 500, what the stock market has done since then, in the week since, or a little more than a week, you will notice here that that did bottom that morning. And over the last week, it has slowly gone, the market has gone back higher on positive news. And so that is good news. And for, let's face it, millions of people in this country sold last Monday morning when the markets were down that much. And I'm telling you, those people are regretting those decisions now. And part of our job, this is very important, one of the important things we do for our clients is we save them from selling during market panics. And last Monday morning certainly qualified as one of those. All right, now let's look at some of the economic data and some of the inflation data that we've gotten since last Monday morning's market panic. We're going to start by looking at the NFIB's Small Business Optimism Index. This basically goes back decades, where this organization, the NFIB, does a survey of over 10,000 small business owners and asks them how they feel about business conditions currently. And if you take a look at this, what you will notice is that this is at 93.7. This was released this morning, and this video is being recorded on Tuesday morning. And what you'll notice is 93.7 is the highest number since 2022, early in 2022. Now, on the downside, one could look at this chart and say, but this number is lower than what it was back in 2019 and even parts of 2020. And that is true. There's still a ways to go to get back to those levels. But it is a positive that this summer, small businesses are becoming more optimistic. I might add that one of the reasons for this is that they know that the Federal Reserve is on the precipice here of beginning their rate cutting cycle, and lower interest rates will help small business owners almost more than anyone else. So, but we were very happy to see small business optimism go up. Now, the next chart that we want to talk about is initial claims for unemployment insurance, which is the most viewed, the chart we use the most in these videos. And the reason I'm going to put it back up, when we last did that market update and we talked about the jobs report was very disappointing, the unemployment rate went up, we said that just the day before, initial claims for unemployment insurance have been 249,000. Last Thursday, we got the next update, and economists were expecting it to be close to 260,000. Well, that's not what happened. It came in at 233,000. And as you can see, that puts it right back in this range that it's been at since early 2022. And I will say that as long as it's in that range, that means that consumers still have a good situation with regards to the job market, and that's going to power them continuing to spend money. So very positive to see initial claims come down to the $233,000 range last week. All right, now let's look at some of the inflation data that has come out. And this morning, we got the release of the Producer Price Index. This is basically measuring inflation for businesses, wholesale inflation. We sometimes go over 3 measures of inflation, that, the CPI, which that comes out tomorrow and Wednesday. We are recording this video on Tuesday, so we don't have that data yet. And then there's the PCE, which is the Fed's favorite measure of inflation. But this PPI is important because it came in today, year over year, 2.25%. Why is that good? That is down from last month. It was at 2.72%. Again, the Fed's target is 2% across measures of inflation. So going from 2.7 down to 2.25. That is a very positive move, and that led markets higher today. The stock market had a really good day today, and it was because of that inflation data this morning. Now, the other thing that I want to talk about on the inflation side that just came out is the New York Fed has a survey where they ask consumers where do they believe inflation is going to be over the next 3 years on an annual basis. And the reason we're mentioning this is this came in at 2.33% this morning. That's the best number in over 10 years. So when you look at this chart, you'll notice that this spiked when, in the early days of COVID when inflation started to soar, and this got up over 4% for looking over the next 3 years annually. But take a look, this has been on a downward trajectory and today just hit the lowest level. So why this is positive is this, along with the producer price index, if we get good numbers on the CPI front, gives the Fed the license to go ahead and start their rate cutting cycle in September, which is pretty much a done deal that they're going to cut. But they may end up cutting by 0.5%, not just a quarter point. If we put up right now the market probabilities, you will notice that this is basically right now viewed as a 50-50. In fact, before those numbers today, it was exactly 50-50 between a quarter point or 0.5 point. After the move today, the market's saying there's a 55% chance they'll cut by 0.5 point, 45% chance by a quarter point. So that is good news if you are small business owners and really anybody of note that needs to borrow money. All right, so just to recap, last Monday morning, we got a market panic globally that was fueled by the Japanese stock market dropping 12% and the unwind of the yen carry trade. When we came in Monday morning and we saw the volatility index north of 60, its third highest level since 2005, we knew that was not a time to consider selling. And sure enough, that was a short-term market bottom, as that we've seen the markets have rallied since then. Now, one quick thing to mention, it is possible, given that we are still only midway through August, and we've mentioned that August and September in past videos are a tough stretch for the markets going back the last 5 years, it's possible the market could revisit those levels from last Monday, and if they do, that would likely be a good buying opportunity at that time. On the economic front, the data that we've gotten since that panic has been positive. The initial claims for unemployment insurance moved in the right direction, going down to 233,000. That's good news for the jobs market. The small business optimism index went up today, hit its highest level since early 2022. We like to see small businesses more optimistic. On the inflation front, the producer price index dropped from 2.7 last month to 2.25. That's good news for the Fed, and inflation expectations for consumers was at its lowest number in over 10 years. This helps the Fed get to a potential 0.5 point rate cut in September if they so choose. Now again, don't forget to like and subscribe. Thank you for watching the video. And one last thing, if you have a comment, whether you agree or disagree, go into the comment section. We love to chat with you. Take care.